welcome to my YouTube channel. My name is Tabitha, and today we are going to talk about shareholders equity. So shareholders equity is part of financial equation that state asset equal to liabilities plus shareholders equity. But today we are going to work on how to calculate shareholders equity and what it's all about and why do we need it. So why we need it, most of the time is used for calculation of ROE, which is rate of return on equity. So let's look more into that. And if you're new to this channel, please subscribe for more videos and I will appreciate your support. Thank you. So today we have agendas that we're going to work on, and one of them is what is shareholders equity. So, and why do we need it? And the formula and how we calculate it. And then we will show example on the balance sheet. What is shareholders equity? The formula for calculating shareholders equity. Another one will be the process of calculating it. Those one, we will look at them today. And if you like the video, you can comment and then maybe correct something or add more on the video. Shareholders equity. What is shareholders equity? So in this case, is that value that will be returned to the shareholders if the company were to liquidate, if the company was to liquidate the asset and pay all their debt. So let's say the company is closing down, or maybe they want to start again or something like that. So they will take their asset, all the asset, liquidate them, and then all their liabilities or debt, they pay them off. So when they pay them off, the difference between the asset and the liabilities give you the shareholders equity. And this is the amount that will be returned to the shareholders, like the investors, or maybe people who started the company, which also take part of the capital. So that's it. It's the value that will be returned to a company's shareholders if all assets were to be liquidated and all the company's debt were to be paid. So if you take the asset minus the debt or all the liabilities, you get the shareholders equity. As simple as that. So let's look more information into. Let's look for more information for shareholders equity, and we will move from there. So another important part of knowing shareholders equity is for you to calculate the financial ratio, ROE, which is the rate of return on equity. And then once you have that, you can now decide if the ROE really meet the evaluation of the company and if this company is good enough for you to invest in. So that one will really tell with other financial ratios that you need to use when you're evaluating the fundamental of the company that you want to invest in. Home equity is the value of the homeowner's property. So like, for example, in economies where people buy homes on loans, so if they have their house value goes up, so the difference between the mortgage that they are paying and then the value, the current market value of the house, give you the equity. So that is like the home equity is the value of homeowner property. The next thing is more on shareholders equity. Do you have more information, things that we need to know about shareholders equity and how does it really apply in the financial world? How does it help you do your investment decision? And how does it help you when you are preparing for financial statement for the company? So if you know how to calculate the shareholders equity, you will be able to build balance sheets and all these other things that require shareholders equity value. It is the residual ownership in a firm or asset after subtracting all debt It's just the same as we talked before from the previous slide. That is like that part that has to be returned to the shareholders' equity. Shareholders. It is shareholders' stake in the companies. It is always identified on the company's balance sheet. So it's always on the left side under the liabilities section. So that's what it is. It's more definition and what people, other different authors think is the definition of shareholders equity. So now let's look at what is the formula and how to calculate the shareholders equity. So we all know like the financial statement equation is always the total asset equal to total liabilities plus shareholders equity. But in this case, we are looking for shareholders equity. So we give you the total asset minus total liabilities. In other words, like the way we were defining it, that let the company sell all the asset and pay all their liabilities or debt, and whatever remain as shareholders equity. So that's the meaning of this formula if you really apply it in words. So this is the equation. When you interpret it now, you mean I am selling all the asset and I'm going to pay all the liabilities, and whatever that will remain is the shareholders' equity. People who invest their money in that company will get their money back. Okay. So let's look at the process now. So where do you get the information when you are calculating shareholders equity? Most of the time you can be given a question or a bunch of information, and then it will be your duty now to organize the information and try to give it the meaning. So they can say, okay, this company had this asset, they had these liabilities, they had this asset, they had these liabilities. So when you are now trying to calculate, you will now put the asset together, and it should be very important for you to know what is asset and what is liability. So then once you get those ones, you can now add them up, add this one up, subtract, and you get the shareholders equity. So locate the company total asset on the balance sheet. This is when you already been given the balance sheet, which make it much easier because everything will be fine in that category and in the category. But if it's not, if it's the raw information, you have to put it together and try to organize it. Locate total liabilities listed separately. Subtract total liabilities from total asset to arrive to shareholders' equity. Total asset will equal the sum of liability and total equity. So this is what I've already explained from the previous slide. So that's the process. You have to look for all the asset, look for all the liabilities, get the difference, and you get the equity. So now let's look at more information. So in other formula, we use the retained earnings, which will make our next video. How do you use retained earnings when you are now using the shares? So that's the different topic of another day. So shareholder equity can also be expressed as company shareholders' capital retained earnings less the value of treasury shares. So that is the topic of another day. So now let's look at more information on the balance sheet and then how to calculate the shareholders' equity. Component of shareholders' equity, some of them are retained earnings, but this is when you're using the shares, when companies issuing more shares. But the previous one is when you're using assets and liabilities. So this is we will make a different video concerning retained earnings. How do you calculate shareholders equity using retained earnings? But for today, we are focusing on asset, liabilities, and shareholders equity. How do you use that information to calculate shareholders equity? So retained earnings are part of shareholders equity and are the percentage of net earnings that were not paid to shareholders. Okay, so that one is much different. So let's look at the example that I just prepared, the balance sheets, and we will see everything virtually, and we will make more sense for some people who learned virtually. When they see something, it makes sense. So on this thing, so we have asset side. So when you add them up, you get 480. That's its current asset. The long-term asset, you add them up, you get 75,000. And when you get the total asset is 555,000. You come to the liability side and you have current liabilities, 134. Long-term liabilities, you get 170 and 1,000. When you get total liabilities, you get 304,000. So now let's go and calculate shareholders equity. It's the total asset minus total liabilities. So you already put here, this is your total asset. So you pull it down. This is your total liabilities. You pull it down. So when you get the difference, you get the 251,000. So this information of 251,000 shareholders equity, you can use it to calculate the ratio of ROE, which will be more important when you are evaluating the company, if it's worth it for you to invest in this company and what are the numbers. So this is all for today. We have really gone through a lot trying to calculate shareholders equity, and it's a very simple concept. As long as you know how to identify your asset, how to identify your liabilities, and then you get the difference between that. And what they're trying to communicate is that when the company decide to liquidate all the asset and pay their liabilities, and then whatever that will remain there will be the shareholders equity. And if you like this video, thanks for watching and subscribe for more videos.